Hello, my name is Darren and I'm an accountant. Today I'm going to illustrate to you a cash sales transaction in the trading business, as well as concepts such as sales turnover, cost of sales, gross profit, net profit and return on equity. Let's start with an example. Mom wants to buy a birthday cake from her local Walmart. It costs the store 80 Rand to make the cake, but Mom bought the cake for 120 Rand. You may be wondering why. Well, businesses sell their products at a higher price than they have bought them for. This is called a markup. Businesses mark up their product to make a profit. Let's put the transaction in a cash receipts journal or CRJ. The first transaction of the first day of the month was made by Mom for 120 Rand. 120 Rand will go in the sales column for money received, but 80 Rand will go in the cost of sales column because that's how much Walmart initially paid for the product. When we are done, we write 120 Rand in the bank column and underline the analysis of receipts column because it's the last transaction for the day. What if we weren't given the cost of sales price? Here's a formula to help you figure it out. Selling price times 100 divided by 100 plus the markup. That will give you 80 Rand. Finally, a business would post the transaction in the general ledger. But remember, when a business sells a product, it affects the general ledger 4 times instead of 2. First, you would debit bank because your bank is an asset going up, and credit your sales because sales is owner's equity going up, but both with the selling price. You would then debit cost of sales, its owner's equity going down, and credit trading stock because that's an asset going down, but with the price the items were made. Let's put it into action. On the 1st of August, the bank is debited with 120 Rand. You would write CRJ in the folio column, thus reminding you what CRJ to refer to. In the nominal section, the sales account would be credited with 120 Rand too. We would put bank in this column because that is the corresponding account. Therefore, we would do the same for the bank, but put sales instead. Moving on, we credit the trading stock account with 80 Rand because your trading stock worth 80 Rand is going down. The corresponding account is cost of sales. The cost of sales account will be debited with the same 80 Rand. We put trading stock in the column because that's the corresponding account. And cost of sales in the trading stock account. Easy as that. There are a few other things you should know in accounting. Like gross profit. This is the profit that you receive from selling a product. The formula is selling price minus cost price. That means we will have 40 Rand gross profit for the month of August so far. Next is net profit, the profit that is left over after subtracting your expenses from your gross profit. So your gross profit minus expenses plus other income. We have 35 Rand net profit. Lastly is your return on equity, the total amount of money made in your business, but including your capital. The formula is net profit divided by capital times 100. Our return on equity in the business is 3.5% for every cake sold. That's all for me. Work hard.
Created using Powtoon.